Every support and resistance tool you've ever used draws a line where price touched. A line that tells you price was there. It tells you nothing about why it stopped or whether anyone was defending it. This is Aurora. It doesn't draw a line where price touched. It draws where the buyers and sellers actually fought, and it shows you who won. This green zone here, that's not a line I drew because price looked like it turned here. That's a price where a real measured order flow shows resting buyers absorbed everything thrown at them multiple times. Today I'll show you exactly how it reads that, how you set it up, how to read the setups and how to use them. This indicator is specifically useful for people who like to trade the lower time frames, such as 5-minute charts on instruments such as the Nasdaq 100 future, S&P 500 futures, gold futures and currency futures, plus of course cryptocurrency perpetual futures. Before anything else, 2 honest disclaimers. If any of these are a deal breaker, I'd rather you to find out in the first minute than in 10 minutes into this video. Aurora is built on TradingView footprint engine, and footprint data is a premium tier feature on TradingView. There's no way around that. It's not my personal paywall, it's the data. If you are on a lower plan, the indicator will load, but it can't pull the footprint, so it won't draw. If you want to try out the TradingView premium plan, use my sign up link in the pinned comment to open a new TradingView account and get $15 off your first subscription. That way you can try out the premium plan and this indicator at a great discount. The second thing to know, and this is really important, Aurora needs order footprints. That means it needs to know how much actually traded at an individual level and whether it was bought or sold. That data only exists on instruments with real centralized volume, so use it on US index futures, for example the Nasdaq or the Standard & Poor's 500, gold futures, currency futures, cryptocurrency futures, anything that trades on a real exchange with reported volume. Do not expect it to work properly on spot forex or CFDs, because spot forex has no centralized volume. It only counts ticks, and that will give you garbage zones. In the pinned comment, you'll find a list of instruments that have real volume and where it works on well. As with almost all of my indicators, the indicator is free and open source. You can read every line, copy it, modify it, learn from it. I'm not selling this indicator, it's forever free and open source. The link is in the description and pinned comment. The only thing, as always, I ask in return is that you leave me a like, subscribe to the channel, and especially leave a comment so I stay motivated in continuing to develop free tools that actually help you with trading. Okay, with that out of the way, what are you actually looking at? The one concept the whole indicator is built on. Forget price for a second and think about flow. When price drops into a level and aggressive sellers are hammering it, but price stops falling even though huge volume is trading, that's not random. Someone with resting limit orders is sitting there soaking up every market sell. The sellers are hitting, but somebody bigger is eating up everything thrown at them. That's called absorption, and it's the footprint signature of real demand. When Aurora sees a price row inside a bar that carries a big chunk of that bar's volume, where buying and selling were roughly balanced, meaning aggression got absorbed, not just one-side panic, and it happened at the low of the bar, it marks a green demand zone. Flip it for the top of a bar and you get a pink supply zone. Aggressive buyers getting absorbed by resting sellers. So the green and pink zones are not price bounced here. They are, this is a price where someone demonstrably defended with size and the order flow proves it. That's a fundamentally different thing from a line on a chart, and this is why I built this indicator. Quick note, you'll also see faint blue and orange lines. Those are a second type of level called initiative nodes. They mark where one side was aggressively dominant, heavy one-sided buying or selling. That's where aggressors committed, which is useful context, but it's not the same as resting liquidity. So I keep them faint and separate on purpose. So don't confuse the two, please. Bright zones are absorption, faint lines are aggression. Every key zone gets a label, and once you can read it, you can read the whole chart at glance. The price, that's the middle of the zone. Delta, the triangle number, that's a net buying minus selling inside the zone. On a clean absorption zone, it stays small relative to volume. That balance is what it makes absorption. A mild positive on a demand wall just means buyers slightly had an edge while soaking up the hits. The X number, this is the one I really want you to care the most about. That's the reinforcement count. It's how many times this level has either been retested or rejected, or had a fresh absorption print within it again. X1 is a level that's shown up once. X4 is a level the market has come back 4 times and lost 4 times. More touches, stronger level. Aurora shows you that visually too. The brighter the glow, the stronger the level. One more tag, flip. That marks a level that broke and then price came back and got rejected from the other side. Old support became resistance, so a classic flip. I'll be very straight with you here. That's the weakest evidence class on the chart, because a flip is born from a single rejection, not from measured absorption. Treat a fresh 1x flip with more suspicion than a multi-touch absorption zone. I'll come back to why at the end. The dashboard, top right, I call it the cockpit. It gives you the nearest supply and demand in ATR distance, your delta for the current bar, cumulative delta over the window, and the point of control. That window delta is your fastest read on who's actually in control right now. Defaults are working well mostly, but feel free to experiment a bit to adapt things to your style of scalping and day trading. And before you ask, no, there is no answer to a question like what are the best optimal settings for instrument XY? Because I don't know your style of trading and thus cannot answer this question. Now, how do I actually use this indicator for day trading? Let me walk you through 3 typical setups. I will use my own visualization for this to make things clearer, and also because TradingView does not really support chart replay with a request.footprint function that is essential for this indicator. Please be aware of that when using this indicator in replay mode. It will show you different things due to this. Not because the code is buggy, but because it's not supported by TradingView. Setup 1. Absorption catching a flush. Right here, price flushed hard. Sellers were in control, and price drove straight down to this zone and stopped. Look at the label, heavy volume, balanced delta, and it's held since. That's textbook use. When price is falling and hits a bright, multi-touch demand zone, that's your signal to stop thinking short and start watching for a catch. Not a buy button, a change of your bias level. The flow is telling you a buyer with size lives here. Setup 2, a multi-touch wall as a fade reference. Now, on the other side, price rallies up into this pink supply. The label says X4, defended 4 times, and watch the cockpit. Bar delta going negative as price tests it. That's sellers stepping in at the level in real time. This is where a trader looks to fade, short the level, or at a minimum tighten up and protect any longs. The level plus the live delta agreeing is the read, not the one or the other. You have to use both together. Setup 3, the flip and why you treat it carefully. Earlier we had this, a demand zone that broke and then flipped to supply when price retested it from below. It worked, price rejected. But this is a single touch flip. And I want you to internalize the hierarchy. A 4 times defended absorption zone is much stronger object. It's a much stronger object than a fresh flip. When 2 of these line up, say a flip that sits right at an old multi-touch zone, that's Confluence. And this is where flipping becomes worth trusting. On its own, a X1 flip is the weakest thing on the chart. Okay, now let's talk about some important limitations with this and also any other indicator. Everything I just showed you describes what Aurora measures about the past. Objectively, rule-based and without interpretation. where the volume actually traded, where delta was balanced, who won each fight. So that part is real and it's not up for debate because it's just reading the footprint data back to you. So as always, it's all about Confluence. This indicator can show you one dimension and gives you arguably better hints at which zones for support and resistance are currently more important than just drawing lines without no volume context onto your chart. And I know many of you are frustrated that I'm not sharing here indicators that basically put your trading on autopilot and you can earn passive income. The simple truth is that trading is actually hard. Despite the fact that all these exchanges and brokers out there try to sell to you that trading is easy and you just need to slap indicator X or Y onto a chart and basically can become rich overnight. They just want you to trade a lot, so you pay them a lot of trading fees. So I hope you naturally can understand that I cannot share my complete working trading systems here because this would immediately lead to my edge being arbitraged away. I will, however, in the near future release a web application where you will be able to see many of the setups that lead to my own trades, with you then being able to translate them into your own trades. More than that, probably in 1 to 2 weeks. Think about learning to trade like learning a language. You will be quite fast able to learn how to introduce yourself or order some food, but it will take months or even years to become somewhat fluent. My tools will help you to become fluent in the language of trading faster, a bit like you will become faster in mastering a new language with the help of a personal tutor, rather than having to learn everything from a textbook. So yeah, that's Aurora, open source, free, link in the description. You'll need TradingView Premium for the footprint data and run it on real volume instruments, index futures, gold futures, currency futures, or cryptocurrency futures. I think it will help you specifically on lower time frames to detect better zones for support and resistance and ultimately pick better trades. If you enjoyed this video, leave me a like, subscribe and leave me a comment. I publish new videos about trading, indicators and quantitative trading methods every week. See you in the next video.